Here's a summary of the Caesars Entertainment Incorporated (CZR) Q3 2025 earnings call, designed for reading aloud, focusing on key metrics, forecasts, risks, and executive statements. Good afternoon, everyone, and welcome to the Caesars Entertainment Incorporated third quarter 2025 earnings conference call. Today, we'll review CZR's financial performance for the quarter ended September 30th, 2025. Please note that forward-looking statements may be made and a reconciliation of non-GAAP measures to GAAP is available on our investor relations website. We will also be discussing hold normalized results, with full reconciliation in our investor presentation. Financial highlights for Q3 2025. Consolidated net revenues, $2.9 billion. Consolidated adjusted EBITDA, $884 million. Hold normalized consolidated EBITDA, $927 million. Segment performance. Las Vegas, reported same-store adjusted EBITDA of $379 million, and hold normalized EBITDA of $398 million. Performance was solid despite softer market-wide visitation and adjusted for unfavorable table games hold. Occupancy was 92% versus 97% last year, with a 5% decrease in average daily rate, ADR. Trends showed sequential improvement throughout the quarter, with September being the strongest month. Q4 bookings are strong, with group mix projected to increase to 17%, on track for a record EBITDA year in 2025 for the segment. Recent CapEx investments, like the new pool experience at Flamingo, Pinky's, Gordon Ramsay Burger, and Havana 57 are exceeding return expectations. Upcoming projects include the Omnia Day Club at Caesars Palace, the rebrand of the Cromwell to the Vanderpump Hotel, and Project 10 by Luke Combs. Regional, reported adjusted EBITDA of $506 million, and hold normalized EBITDA of $517 million, driven by 6% net revenue growth. Year-over-year revenue growth was fueled by strong performance in Danville and New Orleans, alongside same-store net revenue growth from strategic reinvestment in the Caesars Rewards customer database. Regional EBITDA grew 4% on a hold-normalized basis. Margins improved sequentially, and new projects in Danville and New Orleans are generating strong returns. Phase 2 of the master plan at Caesars Republic Lake Tahoe is on track for completion in mid-2026. Digital delivered net revenue of $311 million and adjusted EBITDA of $28 million. Hold normalized adjusted EBITDA was $40 million. The segment's adjusted EBITDA was negatively impacted by lower NFL hold in September and a difficult comparison to last year, which included World Series of Poker, WSOP, results. Total monthly unique payers increased 15% to 460,000. Core KPIs remained strong. Sports, total parlay mix improved by approximately 210 basis points year-over-year, with growth in average legs per parlay and higher cash-out mix. Volume growth was 6%, with sequential improvement. iCasino delivered 29% net revenue growth driven by continued strength in volume and average monthly active users. Progress on the Universal Digital Wallet and proprietary player account management system is strong, now live in 22 states. The Missouri sports betting launch in December is anticipated to be the first state with a shared wallet experience from day one. A full rollout is expected by early 2026. The company remains on track to exceed its 50% target flow-through for the year. Management's forecasts and future outlook. Las Vegas, sequential improvement in operating trends is expected to continue into Q4, driven by positive leisure trends and a strong group and convention calendar. Q4 bookings pace is strong, and the segment is on track for a record EBITDA year in 2025. Group bookings are projected to reach a record in 2025 compared to 2024, with Q1 2026 expected to set a new all-time record. The company anticipates a strong rebound for Las Vegas in Q4. Regional. Expect continued refinement of marketing approaches, focusing on delivering strong returns and improving flow-through from marketing investments. Solid demand is expected to continue in this segment. Digital. The company continues to see a business capable of driving 20% top-line growth with 50% flow-through to EBITDA, on track to achieve long-term goals. A redesigned Horseshoe Online Casino is expected in Q4. The fourth quarter is anticipated to be a strong period, with a run rate of $500 million for the digital segment, by Q4 still being the focus. Significant risk factors: hold volatility, fluctuations in gaming, hold, the percentage of wagers retained by the house, can significantly impact reported financial results, as seen in Q3. Management emphasizes using hold normalized results for a clearer view of underlying performance. Consumer demand. The recovery of leisure demand in Las Vegas remains a key question, with the potential for plateauing at levels below pre-pandemic figures. Broader market factors and consumer discretionary spending are also considerations. Regulatory uncertainty. The evolving regulatory environment, particularly concerning prediction markets, presents ongoing uncertainty and potential risks to licensing and operations. Competition. While CZR believes its Caesars Rewards program and property offerings provide a competitive advantage, ongoing competition in both regional and digital markets requires continuous strategic adaptation. Macroeconomic factors. Broader economic conditions could impact consumer spending and travel, affecting demand across all segments. New Year's Eve timing. The midweek timing of New Year's Eve in Q4 is noted as not ideal for maximizing performance. Game outcomes. Unpredictable sports outcomes can significantly impact quarterly digital segment results. Key statements from executives. Tom Reeg, CEO, acknowledged a soft summer in Las Vegas as anticipated, with average daily rates declining and occupancy dropping, impacting non-gaming aspects. Emphasized that gaming volume held relatively steady, with slot handle only decreasing slightly. Highlighted the significant year-over-year impact of unfavorable table games hold in Las Vegas. Expressed confidence in a strong recovery for Las Vegas in Q4, with improving trends observed. Stated that group bookings are a key driver for rate management and market health. Discussed strategic reinvestments in regional assets, emphasizing the need to drive customer visits to leverage past capital investments. Affirmed that CZR is not entering a promotional war in regional markets, but rather refining its approach to leverage the strength of Caesars Rewards and property advantages. Regarding digital, he acknowledged game outcome volatility, but remains focused on achieving digital goals. Believes the stock looks attractive and expects to be active in stock repurchases. The company is closely monitoring prediction markets and will act if a feasible path emerges without jeopardizing licenses. Brett Juncker, CFO, highlighted significant balance sheet actions, including redeeming $546 million of senior notes and repurchasing $100 million of stock in the quarter, including October activity, bringing total stock repurchases to nearly $400 million since mid-2024, reducing the share base by 6%. Stated the balance sheet is in great shape with the nearest maturity in 2028, and a floating rate debt mix benefiting from potential interest rate cuts. The weighted average cost of debt is just over 6%. Expects continued use of strong free cash flow for debt reduction and opportunistic stock repurchases. Eric Hession, President, Caesars Sports and Online, reiterated strong volume growth in both sports and iCasino for the digital segment. Explained that the digital segment's adjusted EBITDA was negatively impacted by NFL hold and the loss of WSOP revenue compared to the prior year. Mentioned other headwinds including incremental state taxes, higher acquisition marketing spend, and bad debt. expressed confidence in exceeding the 50% flow-through target for the year, detailed the progress on the Universal Digital Wallet and proprietary player account management system, emphasizing its enhancement to the wagering experience, expects a complete rollout of the Universal Wallet by early 2026, confirmed the continued progress on technology is driving strong volumes, and that spending efficiency will drive solid flow-through to EBITDA. Lowlights: soft summer in Las Vegas impacting leisure demand and ADR. Unfavorable table games hold in Las Vegas. Negative impact of NFL hold, and the absence of WSOP results on digital segment EBITDA. Incremental state taxes, higher acquisition marketing spend, and bad debt in the digital segment. New Year's Eve falling midweek in Q4, which is not ideal for peak performance. Overall, CZR's Q3 2025 earnings call indicates a company navigating a mixed environment. While Las Vegas experienced a softer summer, sequential improvements are evident, with strong Q4 expectations driven by group bookings and upcoming events. Regional operations are performing well with strategic reinvestments yielding positive results. The digital segment faces some short-term headwinds, but demonstrates strong underlying volume growth and technological advancements. The company remains focused on optimizing its balance sheet through debt reduction and share repurchases, while carefully monitoring evolving market and regulatory landscapes. Thank you for your attention. This concludes our summary of the Caesars Entertainment Incorporated third quarter 2025 earnings conference call.